Who will sell a product more consistently? A massage therapist or a home heating manufacturer in northern Canada? Common sense tells you that people need heat more than they need a massage, or a home, no matter how much they may like that massage after shoveling snow or how outrageously that massage is administered, they require their home heat first. This basic fact of economic development has been presented most clearly by the brilliant American expatriate Jane Jacobs, a 20th century US-born Einstein who moved to Canada and was effectively ignored by policymakers in the US and Canada for the duration of her life and the duration of her available genius. So the reason that we have a looming economic collapse and a catastrophic economic depression pending is because most of the American wealth that was created in the last 20 years was created in service. And what service was it? It was the service of an illusion. The wealth created in America was a service provided by a group of people pretending that real estate would always go up because of rising property values from rising economic wealth. Except one important point, the rising wealth represented by actual American purchasing power was not being spent in the United States. It was being spent as a form of development capital and expanded consumer purchasing power in the newly industrializing countries that received the lion's share of this transfer. Real wealth was not rising in the United States in the last 20 years. It was falling, and it was falling dramatically. The only reason that most of the industrialized West retained the illusion of this wealth for so long was because of the service provided by Wall Street. The monopolistic printing of more and more artificial paper in the form of more and more money for mortgages, the service of providing a steadily elevating value on the pretense of the generation of more and more wealth. But there was actually ever decreasing real wealth generated in the countries where the steadily elevated artificial value of real estate was taking place. At the end of the day, this is how an illusion crashes down to earth. The US transferred its industrial production wealth to another country, namely China, with India as a service industry corollary. And yet it is US purchasing power that is the greatest economic force driving the economies of the Western democracies. So rates of US purchasing power in the last 20 years are now exposed as artificial, insofar as the industrial base on which this spending was based in the past no longer exists among these greatest of spenders, the American public. In short, US purchasing power is now destined to contract, and to contract abruptly, to better reflect the actual value of the US industrial base. Ergo, we will now have a depression. Our resident Wharton and Harvard MBA school brainiacs have now even made a point of giving away North America's service industry. It does not appear that contemporary corporate whiz-kids understand the basis for genuine purchasing power. I suppose they assume that the rest of the economy in the US is like themselves, and that sleight of hand will feed, clothe, and house those in the population who retain their wits throughout. So the US made China strong by creating a trading system which forced their own people to buy everything from China. They did it because their corporations are greedy, and those corporations wanted to make even more money than they were already making in the oldest system that kept more wealth in the United States. I do have some shocking news for the corporations of the United States. The Chinese live in China. Yes, the Chinese live in China. I know that it is hard to believe that Chinese people live in China, but that is the simple truth. China is not Arkansas, nor is it even San Francisco. So the majority of Chinese people among that rising middle class who have combined made billions of US dollars making kitchens and bathroom and automobile widgets that Americans are buying each and every day, they prefer to buy homes in China and speak Chinese rather than move to Los Angeles and learn English. Also, China is getting away with placing punitive duties on imports from English-speaking countries that are now dependent on their industrial goods. For example, the Canadian native and white subsistence fur harvesters first reaped a benefit from Chinese trade when Chinese buyers raised the price for the furs of Canadian river otters, a luxury good in Canada. China put a duty on those otter furs, the wealth flowing back from China to northern Canada disappeared, but the Canadians continued to buy anything and everything Chinese because they are now established as the low-cost suppliers of choice. So we are now buying a cornucopia of goods from China, and China is buying much, much less from us. This is called a dramatic trade imbalance. And that is the cause of the looming depression. American purchasing power of the myriad industrial goods that drive and define the American economy has transferred both capital and employment from the U.S. to China. And the Chinese prefer to live in China rather than move to the United States and drive up the price of American real estate, which is what Wall Street decided should be the basis for 21st century American purchasing power, rather than industrial goods production, which is the essence of wealth for as long as there has ever been wealth in an industrial society. Now, those of you who wish to see the complete explanation of this talk, including the story of my academic background, my qualifications, and my motivations for this approach, can contact the email and telephone number on the screen. For a $10 processing fee, I will have my mother mail or email a copy to you. I explain in this complete talk why I am unaffiliated with any corporation and why my trade policy research has been successfully suppressed by the English-speaking media and publishing community up until this date. For those of you who are desperate for some genuine practical advice on how to protect yourself and your capital in the run-up to what now appears to be almost certainly a looming depression, I am available for consultation. Generally, my fee is 10% of your capital, which to many people appears to be an outrageous sum. I do this for a couple of reasons. First, I am trying to keep the numbers down so that I am not swamped with clients. Second, 10% of capital is actually a very small fee to pay for a lifetime advice on your capital security. When mutual fund losses, mutual funds being one of the greatest boondoggles ever devised by Wall Street inclined predators, can easily surpass 10% of capital in a day for many investors. As a taste of what I can help people with, I will reiterate and expand some recommendations made by peers of mine regarding good safe havens for capital in the present time. Gold and silver, of course. These products are useful in a time of depression because they tend to, historically, retain their value despite shifts in the value of the paper currency. This means that the risk of paper currency losses are greatly reduced. By currency losses, I mean that your insured money in an insured bank can easily be indirectly valued by as much as 70% in one day alone. And I cite that number because it happened to the Swedish currency in 1992. In countries like the Weimar German Republic in the 1920s, of course, this devaluation was even greater, to the point that their currency became worthless. And if there is a currency collapse, and believe me, a currency collapse is the likely trajectory for certain Western currencies with this $700 billion US bailout to the wrong people, for the wrong reasons, at the wrong time. People with small-scale silver coins will still be able to trade with each other and accomplish trade transactions independent of banks and governments. This is the ultimate security, especially for those with limited, small-scale holdings. Trade is the lifeblood not just of economy, but of healthy people. It is impossible to make and control everything as an individual, so trade with other individuals is a crucial part of a healthy human existence. If I've said it once, I have said it 1,000,000 times, get rid of your mutual funds. All of those century-long growth and aggregate value statistics that your fund managers like to show you on an awesome-looking chart are the worst kind of fraud. Those expanded aggregate values don't exist in our economy. In a stock market free fall, mutual funds are the most worthless kind of paper, fee-bloated rip-off paper. At the very least, buy silver coins for trading and gold coins for backing reserves of large-scale expenditures. Then people should work to establish their own local trading networks for essentials like food, clean water, and basic modes of affordable transportation. And that does not include oil-dependent vehicles. Start cutting the corporate middleman out of your life in regard to the basic necessities and develop local suppliers of necessities that are independent of the existing currency and banking system. This advice alone should allow most participant people to survive the coming depression.